The number one way you can financially thrive in Trump's economy: stay invested. If you have money invested in the market, don't move it. Keep it there. Stay invested. Despite the market shooting up immediately following Donald Trump's election, the truth is no one knows how the market will react in the upcoming months and years. Many say they know what is going to happen. Oh, the high tariffs are going to crush the economy. The lowering of taxes will reignite the companies. Some could be true, others could be false. Even a broken clock is right twice a day. It is good to be informed of what is happening in the world. We're all social beings, so we can't live in complete isolation. But let's not obsess over every possible scenario and try to correct our heading based on some new piece of information. If the market responds positively to all the policy changes, then that is great. Your portfolio will appreciate in value as it has done for the past 100 years. If the market responds negatively, not a problem. You can buy more shares at a discounted price. And as long as US companies over the long run continue to innovate, create valuable products for their customers, and generate profit, your portfolio will bounce back and appreciate with time. The first rule of compounding: never interrupted unnecessarily. The number two way you can financially thrive in Trump's economy: segueing from the earlier point of staying invested, play the long game. According to a survey by Empower, in the latest election, half the Americans believe that the results of the 2024 presidential election would directly affect their personal finances. Yes, the election was important. The president drives new policies and appoints important cabinet secretaries. And there are specific policies that does affect everyday people directly: tax rates, credits, deductions. However, for the most part, when it comes to broader economic policies, the connection between those policies and how it affects our personal finances is generally indirect and minimal. Most often what drives the economy and the stock market are macro events beyond even the president: new technological innovation, international trade, geopolitical events. Thus, regardless of who is in the White House for the next 4 years, we must play the long game. The market may react positively right now, but it could quickly turn. And vice versa, it could be the start of a new bull run. No one really knows. So take the news with a grain of salt. Stick with the tried and true, the simple strategy of building wealth regardless of who is in the White House: living below your means, staying out of debt, and staying invested in the market. Number three way you can financially thrive in Trump's economy: consider additional diversification. Alright, but let's say you're still uneasy about all the changes proposed by the new administration. Is there something you can do to mitigate uncertainty? At least to give you some mental peace? If you really want to do something, I say consider additional diversification. Diversification is one of the best weapons to mitigate risk. The more we have our money spread across different companies, industries, and even countries, the less our money is impacted by one variable. Currently, one of the major items being proposed by the Trump administration is broad and steep tariffs. A tariff is a tax placed on goods when they cross national borders. The most common type is an import tariff, which taxes goods brought into a country. So in our case, goods imported into the United States. Trump has recommended at least 60% tariffs on China and 10 to 20% on everyone else. That is pretty steep, a level we haven't seen since the 1930s. Now, will this really come to fruition? Only time will tell. Some say Trump is using tariffs as a negotiating tactic to lower other countries' trade barriers. And if Trump sees tariffs hurting stock prices or pushing up interest rates, he might back off. But he may not. No one really knows. But what is true is that tariffs are a major disruptor. Whether it goes up by 60% or 20%, it will have an impact on trade and supply chains. And as I mentioned earlier, one of the best ways to mitigate risk that is within our control is through diversification across different asset classes. Now, if you're already invested in the US public companies through a broad market low-cost index fund, you're already well diversified as you can be when it comes to US stock market. You're invested in all 4,000 publicly traded companies at rock bottom price. But let's say you want to diversify more, beyond the US stock market. In that case, I would recommend looking at some following options. 1. International. Consider adding some international flavor to your portfolio through a total market non-US index fund. 2. Real estate. Consider adding some real estate sauce to your portfolio through a broad real estate investment trust, aka REIT. 3. Bonds. Consider adding some bonds to your portfolio through a total bond market index fund. Bottom line, once you have a foundation of US stocks as your core wealth building engine, additional diversification will give you a greater exposure beyond just the US companies and hopefully mitigate risk. In talking about mitigating risk, do you know what's another risk we need to mitigate against? Our exposure in the online space. Ensuring our sensitive information is well protected online. Which is why I'm excited to talk to you about Aura, the sponsor of today's video. Living in the digital age, we're seeing more and more data breaches these days. Dell suffered a breach that exposed 3.9 million customer records, including sensitive personal information. Ticketmaster experienced a massive breach, compromising over 560 million customer records. And just a few months ago, National Public Data announced that it has suffered a major breach potentially impacting every American. The incident compromised over 2.9 billion records used for background checks, including critical personal information such as full names, addresses, date of births, phone numbers, and most importantly, social security numbers. And it has been confirmed that members of the hacker group have released the sensitive information online for free. If you haven't been taking your personal information online seriously, now is the time to change that. You are more vulnerable than ever in today's digital landscape. Thankfully, I feel well protected because I use Aura. Aura monitors my personal data, including my social security number, across billions of data points like the dark web and public records to alert me about potential identity theft. Additionally, Aura offers a variety of other features to keep me safe online, including Password Manager to help secure my passwords, antivirus protection, a VPN for secure browsing. This I use almost daily, and Data Broker Opt-out to stop companies from selling my personal information, all at one affordable price. I'm not leaving myself and my family vulnerable to data breaches, and if you don't want to either, go to my link aura.com/financialtortoise and try your first 2 weeks for free. I'll also have a link in the description below. Alright, with that said, let's get back to the video. Number 4 way you can financially thrive in Trump's economy. Monitor and manage your spending. One of the big risks with increased tariffs is that with higher rates, you could see higher prices on imported goods. In addition to 60% tariffs on all Chinese goods, Trump has hinted at 25% tariffs on most Mexican goods, with cars subject to much higher rates. Understand China and Mexico are two biggest suppliers of US good imports, combined accounting for close to 30% of all imported goods to the United States. Again, we don't know exactly how this will play out in the broader economy. However, increased inflation is a real possibility if a version of proposed tariffs does become reality. And while we can't do much about these big policy changes, we can better prepare by continually monitoring and managing our spending. Essentially focusing on what we can control and not what we can't. So if you're not monitoring your monthly spending, start by doing the following. 1. Track your current expenses. I say do this for at least 3 months, or go back 3 months of expenses. 2. Review your spending so you have a good understanding of how much you're spending and where. 3. Look for opportunities to reduce or optimize. If prices of certain goods are going up, how can you adjust? How can you change your shopping habit? Can you cut back in one category to compensate for an increase in a different category? Are there saving strategies that you can implement, such as bulk buying or using generic labels? Remember Peter Drucker's famous saying, "What gets measured gets managed." When reading the news or watching talking heads talking about the economy, it's easy to get distracted by big policy changes and big tariffs. However, as I mentioned earlier, many don't have a direct impact on our day-to-day. And most of all, we can't do anything about it anyways. So I say focus on what you can control. Measure your spending and manage your spending. Number 5 way you can financially thrive in Trump's economy. Monitor interest rate trends. Another element that is at play currently is the interest rate, or more specifically, the Federal Reserve's cutting of interest rates. In the past year, the Fed has been methodically lowering interest rates to help ease inflation. Its goal is to help inflation steadily move towards the Fed's 2% target. However, with the new administration, if the Fed will continue to lower interest rate at the pace that it has been is in question. If higher tariffs begin to impact inflation, the Fed could choose to hold the interest rate higher for longer. Also, this point is a bit controversial, but Trump has expressed a desire to have more influence over the Federal Reserve. The Federal Reserve is an independent agency whose mandate is to keep inflation low and the labor market healthy. Therefore, historically, the President and the Federal Reserve always operated at an arm's length distance. So how will this relationship play out with the new administration? We'll have to watch and see. As you heard me say multiple times throughout this video, there is a lot that we don't know. So we have to be careful jumping into conclusions and taking actions based on possible future scenarios. But that also doesn't mean we shouldn't do anything. There are things we can do to thrive financially during this time period. And to be frank, in any time period, specifically when it comes to interest rates. 1. Monitor the changing interest rate trend. Don't obsess over it, but have a high-level understanding of the relationship between interest rate, inflation, and possible economic policies. 2. If the interest rate does continue to decrease at the same rate, and you have some debt such as home mortgage, consider refinancing if it makes sense for you. 3. If you have high interest debt, work to pay it off as soon as possible. While the trend of interest rate is down, we'll never know when it could reverse itself. When we look at interest rate changes in the past 3 to 5 years, it could look like it's bouncing around everywhere. One year, it's rock bottom. Next year, it shoots up like a rocket. However, like the stock market, when we look at a broader 30, 40 to 50 year time period, it generally moves in cycles. It has its ebbs and flows based on the broader economy. Thus, if you're in a strong financial position and have the ability to wait and be patient, you can take advantage of interest rate changes to your favor and not be beholden to it. Before we go on, a quick question for you. Are you not sure if you're on the right track when it comes to your finances? Are you looking for some additional guidance? Well, if you are, I have great news for you. I have a free gift that I want to share with you. By answering just a few questions in this financial health awareness quiz, you can receive a free, customized financial plan. A plan that will show you how you're currently doing with your finances and ways you can make it even better. So make sure to go to the link I'll have in the description below to receive your free plan. My gift to you for taking your precious time to watch my boring videos. Alright, with that said, let's get back to another way we can thrive in Trump's economy. Number 6 way you can financially thrive in Trump's economy. Be wary of temptation. One of the interesting promises that President-elect Donald Trump has made to his voters is his pledge to ease regulations on cryptocurrency. He has said he would ease regulations on company listings, exchanges, finance and mining, and create a national stash of Bitcoin. Essentially, he has pledged to make US the crypto capital of the planet. Now, will the new administration follow through? Again, like all other policies, we have to watch and see. However, the crypto enthusiasts are optimistic, as reflected by the soaring Bitcoin price since the election. The world's largest cryptocurrency has set a new record high at $90,000. Thus, it's easy to let our minds wander, right? Am I missing out on something? Should I be looking at assets like cryptocurrency more closely? Well, I say be careful. Be careful of temptation. Assets like cryptocurrencies are very volatile. They're not backed by income or an economy. They're entirely driven by supply and sentiment-driven demand. Demand driven by buyers who are obsessed with making money quickly. And temptation is not just isolated to crypto during this new administration. With proposals to increase federal investment in infrastructure and energy, some may be tempted to position themselves to financially benefit. Maybe buy more oil and gas company stocks. Maybe buy ETFs that are focused on construction and material companies. But if you're investing in a total US stock market index fund, you already own energy and infrastructure companies. Additional investment from the government and profit in businesses will eventually be reflected in your holdings. And the truth is that we have no idea how these investments are going to play out. We don't know what companies are going to be affected and if these investments will actually have a positive impact. We have to wait and see. Bottom line, it may be tempting to try to eke out some edge based on the anticipation of these policies. However, be very careful. There is so much more that we don't know than we do. Thus, as mentioned earlier, don't get crafty. Play the long game. The number 7 way you can financially thrive in Trump's economy. Alright, let's get tactical. Maximize your tax savings. The first Trump administration passed the Tax Cuts and Jobs Act, TCJA, in 2017, an act that lowered the tax rates for individuals and businesses. It cut the top income tax rate from 39.6% to 37%, and it also doubled the standard deduction. Originally, this was set to expire at the end of 2025, and tax rates are scheduled to go back up. However, now the word on the street is that not only are they planning to extend it, they plan on expanding it. Lower tax rates and higher standard deduction is likely going to stick around after 2025. It could include lower corporate tax rates. It could include tax exemptions for tips, Social Security benefits, and overtime pay. And we could see additional deductions for car loan interest and state and local taxes. Now, we have to wait and see what will actually be implemented, but tax changes are something we should keep our eye on because this is one thing that could have a direct impact on our wallet. For example, one of the proposals is reversing the limited deductions for state and local taxes. The 2017 proposal increased the standard deduction. However, it also capped the total state and local tax deductions to $10,000, also known as SALT cap, a cap that impacted people who have high property tax bills. If this is reversed, it means people who live in high cost of living areas with high property taxes could pay less in overall income tax because they could deduct more. Again, we have to wait and see, but if you're currently paying high property tax because you live in a high cost of living area, this one might be one to keep an eye on. Bottom line, you should always be trying to save money on taxes, but there could be greater opportunity to optimize your tax savings. Number 8 way you can financially thrive in Trump's economy. Save more and invest more. Alright, if you're getting a bigger tax break, great news, right? I mean, if your marginal tax rate was set to increase to 28% versus 24%, but it remains at 24%, you save about 4% in federal taxes. That is quite a bit of savings in my book. And the temptation with having more money in your pocket, if you're a normal human being, is to spend it, right? Hey, the stock market is up, I'm paying less in taxes, now is the perfect time to buy that new toy I always wanted. However, I say you resist. It's great that you get to keep more money in your pocket, but that doesn't mean you should go out and spend it all. You should focus on saving that extra money, especially if you're in your wealth accumulation phase. There's always disruption when there is change in power. The new leadership wants to implement new policies, new agenda, and new ways of doing things. And the economy could do better because of those policies, or it could do worse. The truth is that we just don't know. And the best course of action in the face of uncertainty is always to save more and invest more. Number 9 way to financially thrive in Trump's economy. Evaluate and understand your healthcare options. This is straying a bit away from financial and economic policies, but our healthcare costs have a direct impact on our wallet, so I wanted to mention it here. While Trump has said he will not again try to repeal the Affordable Care Act during his second term, whether his administration will back an extension of the enhanced premium subsidies is in question. The enhanced premium subsidies were part of the Inflation Reduction Act signed into law by President Biden, a way to reduce premium costs for health insurance and make them more affordable. This enhanced subsidy was set to expire in 2025, and if not extended, health insurance premiums will increase. How it will impact you depends on your unique healthcare situation, but it is good to have a general understanding of potential changes. Another interesting item to keep note is talk about expanding the HSA, the Health Savings Account. Now, the details are still in the works, but if you watch any of my other videos, you know I'm a big fan of HSA. As long as you qualify by being enrolled in a high-deductible healthcare plan, HSA are a great savings account that allows tax-free contribution, tax-free growth, and tax-free withdrawals for qualified medical expenses. Triple tax benefit. It might be worthwhile keeping an eye out for such change if you've considered a HDHP. Number 10 way you can financially thrive in Trump's economy. Maintain a strong emergency fund. As we talked about so far, there are a lot of changes coming down the pipeline. Some very specific tax changes, others more broad policy changes, tariffs, deregulation, immigration. Whether we like them or not, or agree with them or not, the reality is these changes will cause disruption. And disruption causes uncertainty. Markets could shoot up, or the market could plummet. Inflation could continue to go down, or they could reverse direction and start going back up again. The economy could slow down and unemployment increase, or it could go the other way. We just don't know. But for us common folks, one of the best weapons against uncertainty is a well-funded emergency fund. Cold hard cash, easily accessible. It smooths out life's uncertainties. Whatever happens in the near future, we're able to get through it and come out the other end stronger. We're not dependent upon specific tax cuts passing or gas prices going down to make our ends meet because we have enough cash to ride it all out. So if you want to financially thrive during Trump's presidency, buy security by funding your emergency fund with at least 6 months worth of cash. Thank you guys for watching. And the line of security, if you want to learn why I believe it's much better to be rich than famous, please check out my video here. Until next time, all the best.